Hey everyone, welcome back to Upside Down Data. Today I want to talk about Jerome Powell's speech today and how the markets have been reacting. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there. So if you weren't following the news, you might have missed that Jerome Powell was giving a speech today, and he was really just kind of talking more about what the Fed might do going forward. And a lot of people were watching this closely because a lot of people were hoping that they would get some dovish news out of the Fed, which then could give a green light to risk assets to really start rallying. Well, in fact, Jerome Powell did not give a green light. In fact, it was much more hawkish in tone. And essentially, overall, what Powell was getting at was that the Fed, at least right now, isn't even considering cutting rates or anything like that anytime soon. And just in this headline here on CNBC, he talked about there's pain ahead, and basically the idea that there's probably going to need to be higher unemployment, lower growth, etc., essentially slowing down the economy, which could just be kind of speaking around the idea of a recession, that just a real massive curb in demand is needed, and the Fed is not convinced that we're anywhere near there. And they also talked about how they want to see continued evidence that inflation has peaked before they actually get confident in that. So again, just overall hawkish. So the overall disposition was that the Fed is likely to keep on hiking, and rate cuts are not even on the horizon right now, was more or less kind of the message that seemed to be communicated, or at least the way that a lot of market participants seem to have been interpreting those comments. So given that really kind of bearish outlook, kind of hawkish sentiment communicated by Powell, let's see how the markets have been reacting. And if you've been following, they've not reacted well, kind of unsurprisingly, right? The narrative, the thing that's been driving this entire downtrend, we're looking at Bitcoin here, ever since all the way back here, really has been the Fed trying to clamp down on inflation by tightening financial policy, by adopting more hawkish policy. And so to the extent that that's likely to just keep on going on based on these comments, in some ways there's no reason to believe that the downward pressure is going to relieve necessarily. So it makes sense that the markets would be reacting poorly, that they'd be selling off, because a lot of market participants might just think, all right, we're still in this paradigm of down only, going to get out now because I think lower prices are coming. And so that's, the market has been reacting that way. ETH is down almost, currently down about 8.6%, Bitcoin's down about 4.38%. But also, if we just look at equity markets, it's a pretty nasty day. So if we look at the S&P 500, that's what I'm showing here, we're down about 2.6%, which is a pretty big move for the S&P 500 within a day. It's a pretty nasty candle. We can see the NASDAQ is down even further. NASDAQ is down 3.25%, and the Dow is down about 2.23%. So a lot of blood in equity markets right now. And we're also seeing the dollar is starting to move back up, put in this big wick that now is totally reversed and is pushing back towards the upside. And of course, strong dollar tends to mean weakness in crypto. So that's something to keep an eye on for sure. We've seen the dollar really kind of move up. And as that's happening, we've been seeing Bitcoin really move down. So that relationship is definitely holding throughout this time. We can also look at the bond market. If we look at the 2-year yields, the 2-year Treasury bond yields, you can see they're starting to rally back up to these levels here, again suggesting that market participants think that further rate hikes are likely, and so basically they're not seeing right now as a great time to be buying bonds. And finally, if we look at the VIX, which is a measure of basically kind of volatility in the stock market, but kind of what you can interpret as kind of fear in the market, we can see a huge spike on the VIX today off of this news, really kind of launching off of this level of support, more or less, that we had found here, and just shooting back off to the upside. And as the VIX goes higher, stock market tends to go down, risk assets tend to fall. So what does this all mean going forward then, right? We see this initial knee-jerk reaction by the markets to be incredibly bearish, off of that news, to really be selling off from that speech. What does this mean that new lows are coming? What does this mean? Well, let's just think about this. Let's talk about it a little bit more. So one thing that's been going on with crypto is, we've been in this range, right? And we put in our local low, at least so far, of 17.6K. And then we kind of ranged all the way back up to, into the 25Ks, and now we're moving back down. So one possibility of where we go from here is that we just kind of go range bound. And I do kind of think it's quite likely that we go back down and retest, at the very least, retest the bottom of this range from here, talking about 19, 18K. I think it's very reasonable that we could go on from here and have to retest this bottom level. And that would be the first level I'd be looking at as maybe being a likely target that could then act as support to flip us around. Obviously it wouldn't have to go all the way down there. Who knows? We could find support earlier. But that would be kind of one thing that I think is quite reasonable. So if the market kind of really does take this seriously and maintains a bearish sentiment from the speech, I think sweeping these lows is very plausible. And in fact, even going back down to some of these lows would not shock me. Now, the more bearish scenario would be what a lot of people have been talking about for a while, which would be going all the way back down and testing more or less the high from 2019 at around 13K. So decisively breaking below the all-time high from 2017, up to that point, the top of the 2017 bull run, breaking down below that, which had sort of been acting as rough support in this most recent drawdown, and actually having to go back and retest the top from 2019. So I'm not going to prognosticate and say that that's guaranteed by any means, but just the way that the markets have been reacting, I think more pain in the stock market is definitely possible from here. Even if it does form a higher low, there's tons of room to the downside it could go to do that. And if that happens, I think crypto will bleed also. So at the very least, kind of retesting these previous lows seems possible. And one of the other things I did just want to mention here as well was that this move that we're seeing here in this downward pressure, it's also something that one of the models we like to look at here on the channel, one of our models, the market direction classifier, it was saying that pain was likely to come. So we had closed below its critical level back here in that really nasty negative or downward wick that we had, about a week ago. And we've been kind of trading, down in the red ever since. And so we basically kind of flipped the critical level into resistance. We bounced off it, and we're coming back down. And really, when you just look at recent times when we've closed below the critical level, it's not uncommon for a decent amount of downside to follow, from that. So given that, I think some downside, some notable downside from here is also plausible from this model's perspective, that it has flipped bearish. And more often than not, when it does flip bearish, there's some reasonable downside, or at least more downside than we've seen so far when that happens. Even when we quickly reverse, there's greater downside than a reversal than what we've seen here more recently. That doesn't mean it has to happen, it has to play out that same way again, but just looking at it, it would not surprise me at all then if this means we have further down to go. And I think what a lot of people would hope for is that we can find support at these levels at the very least, and then be able to continue back to the upside. But the possibility of new lows is not something that we can just totally take off of the table. So my kind of short-term, very short-term outlook kind of in the coming weeks is that I do think downside is more likely than upside. Again, short-term predictions are very questionable, and frankly, it's there's not, it's a extremely imprecise science. So I could be very wrong, and the market could just decide to rip off tomorrow, and this could age horribly. But my kind of base case is that down is more likely to come from here in the short term. And then it's really going to be watching how price reacts at these levels that's going to be critical. And really, I'm not going to get bullish again until we can reclaim the MDC critical level, which is currently at about 21.7K. So really what happens below this, I'm not really going to change my bias until we can get back above that MDC critical level at the very least. And so, right now I just think that we're going to be in kind of the doldrums for a while. How low we're going to go is yet to be seen. I think it's reasonable that we could hold these levels as support and just kind of be range bound here for a while. But should we start to break below some of these levels, break below the 20K range and then the 19 to upper 18K level, then I would think that further downside is quite possible. And that might be where that 13K range comes more into play. So not financial advice, just what I'm seeing, or just what I'm thinking about, what's going on in the market. But I just wanted to share this about what I think might be going on here. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. Put a lot of updates about indicators and more over there.